Hey, happy Monday. Brad Niccum Nest Mortgage Group here. Second week of August and ready to get another good week rolling here. I wanted to kind of let you know that the buyer pre-approval activity seems to be up again this week. So are rates a little bit. Rates moved up at the end of the week as the 10-year Treasury did tick above 2.8. I've had a lot of questions about rates, and I also have had a couple questions of why one customer's rate is different than another customer's rate. So I thought I'd put this little program together. This really talks about what's called loan level price adjustments, or what we in the business call an LLPA. It affects borrowers' rates. Fannie Mae and Freddie Mac both have LLPAs, and they're almost identical. Let's start with the credit scores and down payment. Below, I put a chart in the email here that talks about what the adjustments to yield are based on the credit score and loan to value, or down payment. The adjustments are not lender specific. We all must deal with the same loan level price adjustments from Fannie and Freddie. In the case that you're putting down 3% and you have a credit score of 620, you will see that your adjustment to yield will be 3.5% worse than someone putting down 40% and a credit score of 740. So if you look at that chart, you'll see the differences in rate and where those cutoffs are. 620, 640, 660, 680, 700, 720, and 740. This is important to know because if you have a buyer that asks if the rate they got quoted is a good rate, it's very important to know this information to be able to give them an educated answer. Not just the answer, oh, my last buyer had a better rate. Your current buyer could have a 650 credit score, and your last buyer might have a 740 credit score. Therefore, the one that had the 740 credit score had less LLPAs on top of the rate and just had a better rate. There are other things that affect interest rates besides just down payment and credit score, and I've put those charts here. There you can see the adjustments to adjustable rate mortgages, an adjustment that goes on to a home that is a manufactured home, and then also what those adjustments are for investment properties. And keep in mind, in today's market, the investment property markups are almost the same as second home property markups on the LLPAs. You also notice I put in there, it'll talk about the high balance loans. It'll also talk about the differences between purchase, rate and term refi, and cash out, and then also multi-unit properties. So as you can see, there are several adjustments that your borrower's rate could be. It's also important to understand that purchase rates are always better than rate and term and cash out refi because they have different LLPAs as well. I did put a link on here to Fannie Mae's display of what all of the loan level price adjustments are. It takes you right to Fannie Mae's seller guide and shows you right where those adjustments are. Another component that is affected by LTV, or down payment, and credit score is PMI. PMI also looks at the debt to income ratio. So any of those customers not putting down 20% always have PMI. And the lower the down payment, the lower the credit score, and the higher that debt to income ratio is, the higher that PMI factor will be, causing that mortgage payment to be higher. If you have any questions about any of the information put in here, give me a call anytime. I'd love to explain it and talk about it. Also, we're still at 24-hour underwriting time, 24 hours of clear conditions. Still closing all loan types in less than 30 days. So if your borrower needs to close fast, call us. Also, if you have questions about appraisal waivers and you want to learn how to do it before you get an accepted purchase agreement, give me a call. 317-538-9825. Thanks. Have a great day. Oh yeah, by the way, don't forget, 1 hour pre-approvals, 7 days a week. Call me and we'll get it taken care of for you. Have a good one.